Mary joined MSO in 2019 and has advanced to the role of Vice President, National Programs and Senior Product Development Analyst. She has been involved in the insurance industry since 1980, primarily in underwriting and management roles for regional companies. During that time, Mary attained AIS, ARE, AU, CIC, CISR, and CPCU designations and held the producer's license. She also has a background in freelance writing, editing, creative collaboration, and business consulting. Mary, take it away.
Thank you, Sue. And hello, everyone. I'm delighted you could join us for the second half of today's roofing webinar. We've got a lot to cover. So now I'm excited to put what we learned into practice with underwriting and coverage considerations. So here at MSO, I work in product development, but much of my background has been with small mutual insurance companies. So that's the kind of company where a single total loss could wreck the year's experience for that line of business. And one event that affects multiple insured locations, that can make reinsurance costs skyrocket and even cause a dip in the AM Best rating. So working with companies like that, I learned something important. Insurance is simple. So why are we in business? Well, we're in business to make money. That's just capitalism, and capitalism is not a dirty word. It means, by definition, an economic system in which a country's trade and industry are controlled by private owners for profit. So in the case of a mutual insurance company, that would be policyholders. That sounds like the American dream to me. So we're in business to make money. Why are we in this business? Well, we're in the business of insurance because we like to help people. Now, while it's true that some of us did not pick insurance, insurance chose us, maybe through a family-owned agency, or you just had good business skills and needed a job and there was an opening in insurance. But those of us who stay in insurance do so because we feel like we're devoting this big portion of our lives to doing something worthwhile. No matter what you do for a living, 40 hours a week is going to be a big chunk of your life. So we feel like we're doing something meaningful. We don't sell contract. We don't even sell protection. What we truly provide is a path to recovery, the financial resources and the practical guidance to help people navigate through a tragedy and get on with their lives.
Hey, Mary,
Mary, you going to put your slides up?
Whoops, am I not sharing?
No.
That was good. It was very good. Hey, Nils, you should be on mute, I think.
There we go. Okay. Well, you didn't miss much except my face. So this is early in the slide presentation. Okay, so what we provide is a path to recovery, the financial resources and the practical guidance to help people navigate through a tragedy, get on with their lives. We can't do that if our agency or our company goes belly up. So once I was attending a nutritional seminar, and the presenter said, here's the shortest dissertation you will ever hear on weight maintenance. Move more, eat less. And he wasn't being trite, he wasn't being cruel. He was laying out what we perceived to be a very complex issue in its simplest terms. So you could get down deep rabbit holes about what you eat, when you eat, and exercise and equipment and drugs and supplements. But ultimately, you won't be successful if you are not burning more calories than you're eating. Insurance is just like that. We can get sidetracked by operational costs and changes in the legislative environment, judicial hellholes, and compensation packages, but ultimately we won't be successful unless we're bringing in more premium dollars than we're paying out in claims. Calories in, calories out, dollars in and dollars out. So just like dieting, insurance success is math. I like to think of it this way. We're not just here for the income, we're also here for the outcome. And that makes everyone in this webinar, no matter what your role in insurance, a real life superhero. You know, we don't get a lot of glamour in insurance, so take it where you can get it. But seriously, every day we're balancing these expectations of policyholders against making sure that our companies and our agencies stay solvent. So when you work in property insurance, roofing systems are a big part of that equation. So we're going to talk very briefly about the history of roofing, because it is interesting to see which types of roofing have endured through the centuries, and that's going to give us a great place to jump off into underwriting. So imagine you're naked and afraid, you're shivering in the cold, or you're blistering in the sun. Any kind of shelter is going to be better than none. So when primitive man started to build his stick huts and then cover them with leaves or animal hides or maybe even grass bundled into thatch, that was a big improvement. In sunny Middle Eastern climates, they learned that they could use the native clay and sun dry it into roofing tiles and accomplish about the same thing in cooler climates with a kiln. So Greece is credited with the first terracotta roofing in about 1000 BCE. We still use terracotta roofing today, and it really hasn't changed all that much. Now, when you hear the word medieval, you probably think of Old England. However, and this will surprise you, 500 AD to 1500 AD, that was happening everywhere, all around the world. But we are going to talk about England because there a defined social caste system influenced the future of roofing. So at this time, there wasn't much middle class. There was the very poor and the very wealthy. Now, England's heavily forested, so timber was abundant. Wood was the most economical building material. Poor people lived in wood or timber houses with wood roofs. Now, there is a difference, though we tend to use the terms interchangeably. There is a difference between wood shakes and wood shingles. Wood shakes are hand hewn, so they have more texture and regularity. Shingles are sawed from a solid block of wood. They tend to be smoother and more consistent. In either case, though, especially without today's modern chemicals, wood roofing absorbs a lot of water. So what does England have besides forests? About 170 days of rain every year. So roof rot, mold, and fungus were part of what was known as the poverty tax, contributing to a much higher rate of disease and mortality among the poor. So when not soaking wet, that wood roofing also contributed to the spread of fire. You might remember in an earlier webinar, we talked about the Great Fire of London. So the rich people, the wealthy, they were seeing all this and really not wanting to be part of any of it. So they're building their homes and their churches and their public buildings out of stone with slate roofs. Now, in the United States, we refer to the early modern period as 1800s to post-World War II, so 1945-ish. There may have still been some thatch roofs in Europe, but not so much in the United States, but we were certainly still using wood and slate for roofing. But soldiers were returning home, they're starting families or reuniting with their families, and this created a big construction boom. So the United States needed affordable homes fast, and that accelerated roofing technologies. So here we should have like angels sing, enter the shingle roof. So an asphalt shingle, as Nils talked about, consists of a mat. At this time, it would have been organic material probably, but now more often fiberglass. And that mat is saturated with a sticky blacktop material. And I know y'all want to call it bitumen, but I looked up the pronunciation so you don't have to. And it is actually called bitumen. And that sticky bitumen is then covered with crushed stone or gravel. Also during this time period, metal roofing became very popular. Now, it might have been more tin roof rusted than the nice, shiny, standing seam product that came out in the 1950s. But nonetheless, metal roofs were an affordable way to get a new house built efficiently. So the fun fact is what Nils mentioned in his presentation. Statistically, a metal roof is no more prone to a lightning strike than any other type of roof. But in the 1800s to 1945, they didn't believe that. So the emergence of metal roofing also spurred a big increase in the sale of lightning rods. So just for fun here, I show you a barn with a metal roof and lightning rods. So you'll remember that. So that brings us up to modern times. And Nils did such a great job of telling us about modern roofing systems, techniques and technologies. I'm not going to reiterate that, but we will talk about 4 decision points that every building owner will face when selecting the kind of roof to put on their structure. These apply whether this is a replacement roof or new construction, and whether it's commercial or residential. But we're going to build a theoretical case study today for homeowners. And this case study is a nice young couple. We're going to call them Jack and Jill Hill. And they live in Pennsylvania, near where I do. They're renting and they're in the process of purchasing their first home. And this starter home needs a new roof. So the conversation is going to go something like this. Jack's going to be scrolling on his phone and he's going to come across a YouTube video about this great new type of roofing. And he's going to say, Jill, come over here, check this out. And she's going to say, yeah, that is really neat. That's the kind of roof we should put on our house when we buy it. So they Google this new product and they find out that it's manufactured overseas and it's available through a few distributors on the West Coast. But when they start to interview local contractors, the guy they might hire to actually put the roof on their house, they discover that most of them haven't even heard of this new type of roofing. And even the ones that know about it, they don't have established relationships with the distributors. They've not taken training. They don't have experience in installation. So that's what I mean by availability. No matter how perfect a roof system might be for your need, if you can't get it in your area, you're probably going to have to move on to the next option. So the Hills are on a tight budget. And so the cost of replacing the roof is a critical factor. They'll need to consider the cost, not just of the roof covering, but all roofing materials. So for a replacement roof, that would include possibly damaged substructure. Maintenance will also be an ongoing cost, or could be. What kind of maintenance will the roof that they pick need? Will they be able to do that maintenance themselves, or will they have to periodically pay someone to perform maintenance? But offsetting those cost considerations are the benefits of energy efficiency, savings on cooling and heating. And those savings can be substantial depending on the type of roof over the lifespan of the roof. Now, the Hills will also think about durability. So initially, they plan to just live in this house for a few years and then flip it and buy their dream home. So in that scenario, a low upfront cost would be more important to them than how soon the roof will need replaced again. But darn it, now they've fallen in love with the neighborhood. The sweet little lady next door came over with a plate of warm chocolate chip cookies when the realtor was showing them the house, and they watched all these adorable kids get on the school bus, and they're thinking, maybe we'll want to stay in this neighborhood. Maybe we'll want to raise our kids here and even leave the house to them someday. So the Hills are going to have to find that sensible balance of initial cost and longevity. And that's going to depend somewhat on climate. So here in Pennsylvania's cool northernish climate, we're really cool today. A good quality shingle roof could last. I know you probably don't want to hear this, but could be serviceable for 20 to 30 years, especially with a steep roof pitch. But suppose the Hills were not in Pennsylvania, they were in the Southwest. Well, that same shingle might not be as durable there because the UV breaks it down. So it may only last 10 to 20 years. Or in Florida's high humidity or hail-prone Texas, that same kind of shingle roof could require replacement much sooner. And the last decision point would be style. It's more important than you think, especially for new construction, but even our case study, the Hills, they know that the look of the roof is going to either add to or detract from the overall appeal of their home. And no matter what kind of roof they pick, it's going to cost a lot of money. So they want to feel good about that. They want to like the way their home looks when they roll up into the driveway every night. It's also going to affect the saleability of their house should they ever decide to flip. So I'm lumping into the style category also building code and HOA requirements because they are connected. Local building code can have a lot to say about what kind of roof you're permitted to put on your house. Everything from substructure and pitch to type of roof covering. And HOA requirements might take that even further, clear down to what color of roof you're allowed to put on the house. So now Jack and Jill have made their decision, and not surprisingly, they are going to go with the old standby. They pick shingle, but that's going to happen in the future. Right now, they come to you, Mr. or Ms. Insurance Agent, and they're looking for homeowners insurance so they can get a mortgage, buy this house, and move in. So one of your jobs will be to evaluate the impact of the present roof, the way it is right now, on the overall underwriting of the risk that you're considering. So a couple very basic things to keep in mind. The type of roof covering material, and as Nils explained, the layers of it add to the structural strain on load-bearing walls. So if the roof is not structured for that much weight, there could be negative impact the whole way down to the ground. The roof covering material also plays a big role in how resistant the roof is to fire, wind, and impact claims. Impact being mostly hail, not too many other things hit the roof. And then that in turn affects the overall lifespan of the roof. And I've listed the common types here, but as Nils talked about, within any of those categories, there are many subtypes. Your underwriting will also need to consider geography. So for example, you may have underwriting guidelines that say you can't write a wood shake or wood shingle roof in an area that's prone to wildfire or where there is proximity risk. So proximity risk is homes very close together in an urban area. And wood roofing could suffer in localities with, I can't say persistent precipitation, I'll just say lots of rain or salt air. Now, if we're talking about shingles, high altitude, hours of sunshine every day, extreme temperatures, and especially temperature fluctuations, cold at night, hot during the day, that will have a more negative effect on shingle than on metal or slate roofing. And my goodness, hail. So a severe hail event is one where the hailstones are at least 2.5 millimeters or about an inch in diameter. So for a long time in insurance, we've known that a single severe hail event will make a brand new shingle roof 10 times more susceptible to future damage. But more recently, studies are showing the impact of subsevere hail events. So that's smaller hailstones, an inch in diameter or smaller. So as each hailstone, or excuse me, as the first hail hits, it erodes that protective layer of crushed stone on the shingle. And then as that layer gets thinner, the next subsevere hail event can penetrate deeper, and so on, each one shortening the longevity of the roof more than the last. So if you're fascinated by this kind of stuff like I am, I know, what a nerd, stick with me because I've got some bonus information at the end of the presentation. But for now, we're going to talk about age of roof because age of roof is big in your underwriting. I mean, it's huge. So an old roof is more susceptible to damage from the elements, and that's going to lead to leaks and the home becoming an overall maintenance risk. It can cost more to repair an old roof since the substructure could also need some replacement. And it can be tough to get an aesthetic match of the repaired portion to the undamaged portion. Now, if the roof on the house you're being offered is bad enough, it could present a moral hazard. Now, remember way back in your first insurance course, you learned about morale risk. That's M-O-R-A-L-E, an E at the end. That's when a policyholder takes a lackadaisical approach to caring for their property because what does it matter? I have insurance. That's not great. But morale risk, M-O-R-A-L, with no E at the end, or excuse me, moral risk with no E at the end, that's worse. That's when a policyholder intentionally gets rid of a problem, usually with a match, to avoid a big maintenance cost and instead collect some big insurance money. So thank goodness that's rare. And of course, our case study, the Hills, would never do that. But it could be a worry if you're underwriting a big old house with a worn out slate or asbestos shingle roof. So of course your application form asks what kind of roof is on the structure and when it was installed, right? So for the Hills to answer that question on installation date, they're going to look to the seller's property disclosure statement, and they'll get that from the realtor. Now, most states, to the best of my knowledge, only Alaska, Wyoming, and DC have limitations or exceptions. All the other states require an SPD. Pennsylvania adopted it with passage of the Pennsylvania Real Estate Sellers Disclosure Law in the year 2000. So in this form, the seller lists known conditions or issues with the house so that the buyer can make a more informed purchase decision. And there are all sorts of questions in the SPD, but here I show the ones related to roofing, and these are from the Pennsylvania form. So a couple of problems here. Check out item 3II. Has the roof been replaced or repaired during your ownership? Well, if that's answered no, that means that the seller is saying, I didn't put the roof on the house that's on it right now. So if that's answered no, the answer to 3I, date roof was installed, that's going to be a guess. Sure, possibly the person who is selling the house had inherited some sort of credible documentation about when that occurred. But more likely, whoever they bought the house from, especially if that happened before the year 2000, they probably estimated when it was installed. And even if the roof was installed by the current seller, it's still probably a guess. Now, think about when you bought your last big ticket item, a stove or a refrigerator or a TV. You remember the exact year? Otherwise, it might have correlated to some big world event or some event in your family, but otherwise it's going to be a guess, and time passes faster than we realize. At worst, it is the seller's attempt to put the home in a better light by minimizing roof age. So is this information in the SPD verified in some way? Well, no, sadly, no, it is not. The seller simply attests that the information is accurate to the best of his knowledge. So are there other ways to verify age of roof? Maybe. Tax assessment records are generally public information. They are here in Pennsylvania, and they can be quite detailed, including information about the roof. So tax assessment records are available through the county assessment office. You can walk yourself up to the courthouse, or the reports might be available on the county's website. So I did a little checking here in Pennsylvania. In Bedford County, where I live, you need a parcel number to look that up. So that's shown on the deed. Our case study, Jack and Joe Hill, could get that from the seller or from their realtor. In Allegheny County, where Pittsburgh is, you can just search on address. You don't even need the parcel number. And interestingly, in Center County, where State College is, Penn State University, I believe you have to have a paid subscription to use the service, but they do make tax assessment records available. Building permits are also public record. So a building permit application generally includes construction plans and drawings, again, can be quite detailed. And then when the building inspector comes to final out the report, he will look at the actual project and note any changes that were made during the course of the project. So if it is new construction, or if the roofing was involved in some way in a remodel, that'll be noted in the building permit. Now, if the home is in a development and there's a homeowners association, you can look at the HOA charter for some clues. Not going to give you an exact year, but some homeowners associations require certain levels of roof maintenance and even replacement on a certain schedule. So you might know that, well, if it's in this development, excuse me, the roof won't be more than so many years old. You could hire a local contractor to get up there on a ladder and take a look at the roof. This might be someone you got a good relationship with on the claims side, for instance. And he could possibly narrow down the age or type of, the age of the roof by the type or even the manufacturer, if he can spot that, maybe some marking underneath a shingle. You could hire a drone inspection. So an aerial inspection looks for signs of wear, material degradation, like shingles that are curling or covered with algae, missing granule, and overall condition. Not going to give you an exact year, but we'll give you some good information. I might be biased with background as an underwriter, but I believe your best bet to hone in on the age of roof will be an on-site inspection. So that's going to give the agent or the underwriter a good estimation of the age of roof, its condition, and its remaining lifespan. Plus, you're going to get a whole lot of other useful information about property and liability hazards on the property. So it all comes down to how much your company wants to spend on that kind of an evaluation. Well, does it matter? Roofing experts say that on average, the roof accounts for 5 to 10% of the total value of a home. So in math that I can work with, if the Hills are purchasing a $200,000 home, up to $20,000 of that value is associated with the roof. Now add to that the substantial cost of a gutter system. And there's a wide range here because there are a lot of types of gutter systems and a big range of quality. So would typically be in the $6 to $60 per linear foot range. Now for 200 linear feet to cover a 2,000 square foot home, that'll add $1,100 to maybe $12,000 to the value of the roof. And then also consider if you have buried downspouts, excavation and landscaping costs. So a few caveats to keep in mind here. From the realty perspective, in the Hills case study, suppose the seller decided to put a new roof on this house before they listed it for sale. That won't add $20,000 to the selling price. Just doesn't work that way. A buyer expects any home under consideration to have a usable roof. A new roof, though, will increase the likelihood of selling the home and doing so quickly. Statistically, roof condition influences the first impression of a potential buyer by about 40%. So that can be 40%, yeah, we love this house, or 40%, can you show us some other properties? Though it may not seem fair, the converse is true. So the Hills may like this home. It's listed for $200,000, but it's got an old roof. So they will say, we know as soon as we buy this house, we're going to have to spend $20,000 to put a new roof on it. We'll offer you $180,000. They will probably end somewhere in the middle, but those negotiations are going to stagnate closing. It's going to take longer to get that house sold. So your perspective as an insurance professional is going to follow that same thought process to a point. Most homeowner policies insure the structure on a replacement cost basis with 80% insurance to value requirement. So a new roof won't really influence the estimated replacement cost of the home. The type of roof, the material could, but not so much whether it's old or new. The valuation process, again, assumes a usable roof on the house. But rather, the roof age and condition is going to determine if the risk is acceptable to insurers in the standard marketplace. And if it is, what kind of roof cover, or excuse me, what kind of coverage they'll offer. So you're still not convinced that it's worth your time to underwrite the roof? Well, maybe the Insurance Information Institute can convince you. So they tell us that in 2023, 42.5% of all incurred loss dollars were for wind and hail claims. And you can see that that number stayed pretty consistent over the 5 years illustrated here. And in an article Jan Seitz shared with me recently, it looks like that number has jumped up to almost 47% in recent years. So it's true that not all wind hail claims are roof damage. There could be some damage to siding or other structural elements, but because of the more horizontal nature of a roof, they take the brunt. The roof takes the brunt of the storm. So most wind hail claims are to roofs. Now, to look at it another way, Insurance Information Institute tells us that of every 100 homeowner policies, 2.8 will have a wind hail claim, and each of those claims will average almost $15,000. So I challenge you to think about your own book of business, whether you're an agency or a company. How many homeowner policies do you have? What's your policy count? Now, if 2 or 3 of every 100 of those policies has a $15,000 claim this year, is that going to impact your year's experience? But don't get overwhelmed by these statistics, because we have solutions, we as the insurance industry. And the first of those solutions is acceptance of risk. So an applicant for insurance is not required by law to volunteer information about the risk, but does agree to answer questions honestly and to the best of his or her knowledge, and they attest to that by signing the application. And the application contains a fraud warning, a fraud statement, something like this one. It's prescribed by the state, so it varies a little from state to state, but this is Pennsylvania's, but they're all pretty similar. Now, that fraud statement on the application gives us some comfort, some support that for an insurer trying to obtain roof information. But key points would be difficult to prove. If you tried to cancel a policy based on roof information on the application, you would have to prove knowledge. You would have to prove that your applicant knew they were providing false information. You would have to prove that they had intent to defraud you. And you would have to prove that the false information that they provided on the application was material to your acceptance or declination of the risk. So based on the information collected at application, you can accept the risk or deny it so long as refusal is not based on unfair discrimination. Bear in mind, insurance by its very nature is discriminatory. Discrimination is defined as recognition and understanding of the difference between one thing and another. That's underwriting. But rejection cannot be based on unfair discrimination. So that means the company has to apply underwriting standards fairly and consistently and cannot base a decision on prejudicial treatment of different categories of people, especially on the grounds of ethnicity, age, sex, or disability. But we sure as heck can base acceptance or refusal on roof type, age, and condition at the time of application. So getting back to our case study, since the Hills are buying a home in Pennsylvania, the insurer has a 60-day free look. So this time frame varies by state. You'll find it in cancellation provisions in the policy form or state endorsement and a mandatory endorsement. The insurer can use this time to dig deeper into the insurability of the home, maybe by looking at this public records we talked about or conducting that on-site inspection. So long as the policy has been in effect less than 60 days, it can be canceled with 30 days notice for pretty much any reason that's not unfairly discriminatory. So for instance, maybe your underwriting guidelines say you won't write a home with a roof more than 20 years old. The application says the roof was last replaced in 2010, so you're still in that window. And that's the applicant's best guess, no intent to defraud you. But you find a building permit for the work, and it's dated in the year 2000. And your reputable building contractor gets up there and looks at the roof, and he verifies, yeah, we haven't seen this kind of shingle around here since 2005. You could issue a cancellation notice for that reason. So companies are meant to use this free look period judiciously because it can be difficult, almost impossible to get off the risk after this initial period for that kind of a reason. Regulators look at it like, hey, you had the opportunity to inspect the risk. If you didn't use it, then the onus is on you to continue coverage. Now I'm going to switch to a marine analogy because that's MSO's whole marketing theme. So personal lines agents and insurers, we usually fish for a customer for life. And that means snagging a couple like the Hills early when they might need an underwriting concession to get this first home purchased. And then hopefully that gains their trust. Maybe they bring their car insurance to you and don't even consider competitive quotes when they do move into that dream house. They might purchase life insurance from you when they start a family or use you for financial services for college or retirement planning. So what kind of underwriting concessions can you offer the Hills to make their otherwise decent home with an old roof acceptable for coverage? Well, you could offer a binder. We don't hear of binders too much in the business anymore, but as far as I know, still legal. So this is a temporary contract of coverage, usually conditioned upon something. So you could say, well, Hills, we will give you a homeowner's binder. If you get that roof replaced in 30 days, then we'll issue a policy. We'll backdate it to the date of the binder to recover the premium, and on we go. And if you don't replace the roof in those 30 days, well, then we'll try to collect a prorated charge for the binder and we'll part friends. Now you might manage this exposure with deductibles. You could simply put a higher property deductible on the policy to make the risk acceptable to your company. So that would mean the Hills would assume a bigger out-of-pocket responsibility for roof damage should they have a claim and resulting damage. Two potential drawbacks though. First, this big property deductible is going to apply to all property losses. So you could, in essence, be penalizing the Hills for other sorts of claims like fire or theft, where their exposure might not be unusual at all. And second, as a young couple on a budget, the Hills might simply not be able to afford their deductible, their share of repair or replacement following a claim. That could put your claims adjuster in a real sticky situation. Since the old roof on this home that the Hills want to buy is shingle and the house is in Pennsylvania, wind is probably the biggest threat, possibly hail being an issue. We don't get a lot of hail in PA, but some. So you could offer a special wind hail deductible option as a condition of acceptance. Now, this could specify roof only, or it could be a general wind hail deductible option. But as we just talked about on the triple I slide, it doesn't really matter. Most wind hail claims are roof damage anyway. This special wind hail deductible may be a flat dollar deductible. It's got to be higher than the Part 1 or the property deductible. Otherwise, it would not be effective. So if you have $1,000 deductible on the policy, your wind hail deductible will probably be $2,500 or more. Or it can be a percentage deductible. Now, if you go this route, it's real important to explain to your applicant and even get sign off on how this works. And the insured still won't remember it when they have a claim. So let's say that you write a policy with 200,000 coverage A, and you put a 2% wind hail deductible on that. And then the storm comes, they have a $10,000 roof claim. The deductible is going to be 2% of coverage A, 2% of 200,000 or $4,000. The insured's going to want to believe at the time of loss that that's 2% of 10,000, the amount of loss, or $200. Now, there's nothing wrong with a percentage wind hail deductible. The endorsement is straightforward. It's not ambiguous. It's just a matter of communication and human nature. So you could also make this risk insurable by modifying loss settlement provisions. Most homeowner policies in the standard market provide coverage for buildings on a replacement cost basis. And back to your insurance 101, you know that replacement cost is just the cost to repair or replace with no deduction for depreciation. So you might instead write this policy on an actual cash value basis. Now that could be a special actual cash value policy form, or it might be an endorsement to a standard policy. But in either case, that loss settlement provision is going to be replacement cost less depreciation for age and wear. So again, this ACV provision is going to apply to all building claims, not just a roof. So if the Hills home is otherwise in good shape, it's just a roof that's the issue, a roof ACV endorsement could be a better choice. So that's going to leave full replacement cost on the table for walls, interior, all your other structural elements, and just apply ACV settlement to roof claims. I will say that in the real world, it's somewhat impractical for any other kind of claims besides wind or hail. If you have a wind or hail claim to the roof and you have a roof ACV endorsement and policy, no problem. It's going to get depreciated. But suppose you have a kitchen fire and this fire damages the cabinets and the walls and the floor in the kitchen, maybe melts some siding and burns up through the roof. Again, it puts your claims adjuster in a tricky situation to say we're going to pay replacement costs for some of this claim and ACV for the remainder. I would be interested to hear from claims adjusters on whether they've faced that, but my perception is that it is generally overlooked if it is a claim other than wind or hail. So maybe the roof is actually not all that bad, but because these old shingles are no longer manufactured, matching's your biggest issue. Typically, loss settlement provisions in a standard policy form exclude coverage for undamaged portions. So if you're considering rating any kind of a home with an old roof, it's important to point that exclusion out at the time of application. Again, get sign off if you can. Otherwise, you could end up with a real unhappy policyholder after a roof claim and they have a patchwork roof. Now, some insurers do offer an explicit matching exclusion endorsement. From what I found, it doesn't really change this undamaged portion exclusion in the policy. It more so clarifies it, calls out matching by name. And in rare cases, you might find a company that offers a buyback for matching. So for a premium charge, a policyholder could purchase this matching endorsement that would remove the undamaged portion exclusion. Or you could possibly offer you could possibly make this risk insurable by offering a cosmetic damage endorsement. So this precludes coverage for superficial damage that does not affect functionality of the property. So here you might think about if you're worried that a metal roof is going to get dings from hail, cosmetic damage exclusion endorsement could help you not have to pay that kind of claim. So let's say that this home that the Hills are buying has a worn out slate roof rather than shingle. Well, in that case, you might want to offer functional replacement cost. So that's sometimes called a hybrid of replacement cost and ACV. I'm not sure that's accurate, but it considers the condition and cost of replacement in a manner that will restore the same function, but not be the same as what the policyholder had. So with functional replacement costs, the Hills could have this worn out slate roof replaced after a claim with shingles. It would be more economical and still be a functional equivalent. The roof would still be serviceable. So ACV, replacement costs, functional replacement costs, they've been around a long time. They're nothing new in this industry, but what is a little newer is a roof schedule endorsement. Now, this is sometimes called a limited loss schedule or LLS endorsement. So this is just a generic sample, no company in particular, but this kind of an endorsement is a matrix of age and type of roof. So down this side, you've got the roof age. Across here, you've got the types of roofing. And it determines at the time of loss, what percentage of replacement costs the company will pay out. So big benefits to this endorsement for the consumers, it can broaden eligibility. If a company has an LLS endorsement at their disposal, it might be able to write risks that they would otherwise turn down. The insured will get a premium discount for it. Now, bear in mind, this is the payout schedule. This is not a rating factor. The rating manual will have a table similar to this, but instead of these big percentages, it'll have rating factors. I will say that the premium discount isn't generally big. It'll be a factor like 0.9 something or maybe 0.8 something at the top end. But the policyholder does save some money by agreeing to take this endorsement. And there's no surprise at the time of loss. They know if they've got a 15-year-old shingle roof, they're going to get 55% replacement cost for that claim. Benefits to the insurer are no argument about that payout at the time of loss. None of the anxiety of an actual cash value depreciation discussion with policyholder. With widespread use, and widespread use of restrictive endorsements could be a whole other webinar. We can't get into that today, but with widespread use, a limited loss payout endorsement could help an insurer manage their expected future losses. So if you know what percentage of your claims are due to wind hail claims, and I'm guessing based on III, it's about 42.5%. A good actuary could help you determine how this kind of an endorsement would reduce your losses for future. And if you have your homeowner's book of business on a revolving inspection schedule, say, I know this is optimistic, but say every 3 years you inspect a risk, and you use this kind of an endorsement to help reduce payout for roof claims, you might be able to push that inspection schedule out a couple of years, save some money on that. The challenges are just like we talked about, communication. See those little asterisks? That's in theory. In theory, there's no surprise at the time of loss, and in theory, your claims adjuster won't get any argument. But it really comes down to explaining that well to the policyholder at the time of application. And the other challenge is getting an accurate age of roof. For this endorsement to work, that's critical. And that would be based on the information collected at application and then applied here at the time of loss. So I'm going to digress a little bit now, but you'll see why. So there's this thing called a direct error.
Hey, Mary, you know the time, right? We are close.
Oh, okay. I'll hustle. Yeah, I think we can make it. Okay. So a direct error is an action that causes a problem. So Mary slips and falls. She doesn't smile this much when it happens, though. So the direct error is that I tripped. Problem is that I fell. So recognizing direct errors leads to blame. Why did you trip? You're so clumsy. You shouldn't have been walking before daylight. You walked too fast. Who in their right mind tries to walk 2 dogs at the same time? But behind every direct error, there is a latent error. So that is an underlying system, design, or organizational flaw. It's the thing that leads to the direct error and ultimately to the problem. So when we evaluate the latent error, that brings us to solution. What did Mary trip over? Was the sidewalk heaved up? Was the street light not functioning? Now, when we identify the latent errors, solutions to prevent further problems jump right out at it. Repair the sidewalk, spread some salt, call the borough to fix the dark street light. This was an eye-opening concept for me. I hope it is for you as well. In the insurance industry, we need to do a better job of identifying latent errors so that we can come to collaborative solutions. A homeowner policy is written, subsequently has a claim. Do we blame the agent? Yeah, you shouldn't have submitted that risk. Do we blame the underwriter? Do we say, yeah, you should have questioned the age of roof, or you should have declined a submission? We're all better served when we look at the latent error, the underlying system design or organizational flaw. And in the case of standard policy provisions, they don't correctly manage a risk with a worn roof. So that leads us to collaborative solutions, the things we just talked about, better ways to evaluate roof condition and creative ways to make the risk insurable. So there are challenges associated with roofing, and Jen, I can skip over these if you'd like because we're running tight.
Well, I think Sue, I defer to you, but I think we're at the top I don't know if Sue, you want to comment?
He has a couple minutes, so
Oh, okay, good, good.
I will hit these quickly then. So sure, there are challenges. Insurance professionals get hit with all kinds of surprises, like solar panels or tiles added after a roof is, or excuse me, a risk is written. Uh, Green roofs, Nils talked about those, the added weight and moisture. New materials where we might not yet have long-term data to determine performance. Uh, Unqualified installation of new materials. And Nils talked about severe weather frequency. We've got storm chaser contractors. So this is the guy who shows up immediately after a claim causing event. He might pound on your door and say, hey, I just walked around the neighborhood. Everybody's got damage. By this time tomorrow, every contractor in town will be booked. If you sign right now, I can take you on and fix your roof. This guy moves from job to job and area to area, so he's not worried about the repercussions of shoddy work, and you might not even be able to find him if there's a problem. Such contractors may also ask for assignment of benefits. So that's pressuring the homeowner to give the contractor the right to work directly with the insurance company. Now, this potentially inflates claim costs, and it's also disruptive at a critical point in the insured-insured relationship. All these years, this homeowner's been paying premium for something intangible. This is your chance to be a superhero and sweep in and help them. And isn't there a contractor blocking your path? So in a quote from the Washington State Insurance Commissioner in a bulletin issued on February 6th, they say when a consumer signs this agreement, assignment of benefits, their right to negotiate with the insurance company shifts to the repair professional and they lose control over their claim. This can lead to delays in repair work as these disagreements are resolved, as well as inflated claim costs, unnecessary litigation, and higher premiums. We've got inspector misrepresentation. That's an independent inspector that works for the homeowner, so not necessarily providing accurate or complete information that the insurance company needs. And we've got rising material and labor costs. So this information is from the National Association of Home Builders, and the blue bars represent 2016 to 2020, the red bars 2020 to 2024. And you can see that every major building component went up except softwood lumber. And we've got stricter building codes. That's good for safety. It's good for clarity among residents, but it also raises the cost of claims. So the challenges are real, they're significant, but we've got three great tools in this battle. We've got better roofing materials. Nils talked about a lot of those. They make the homes more resistant to damage and thus more insurable. We've got all those options for insurability we just talked about, conditions of acceptance, deductibles, loss settlement provisions. And we've got you, the most dedicated workforce in the United States, in my opinion. You're committed to continuing your education or you wouldn't be on this webinar. And you're constantly balancing that consumer expectation and need to help your agency and your company stay solvent. So I have some bonus information and we'll squeeze it in here quick. I won't go through all the notes, but if you get a chance, check out Roof Aging Farm. You can follow this link or you can just Google it. It pops right up. But this project shows what insurance professionals have long known, that we can't trust the lifespans or warranties touted by roofing manufacturers. They are at best averages with little consideration for environmental factors or roof pitch or quality of installation. So thank you. Thank you for attending today's presentation. What questions do you have?
Well, if anybody has questions that haven't been answered yet, we can please email them to us.
Sue, can I jump in and first of all say
Yes.
thank you to Nils, which I said earlier, but Mary, excellent. Was so valuable. This is a great topic. It's on everyone's mind. And until about 6 years ago, nobody was really collecting data or paying attention to it. So but everybody is now. So this was a wonderful turnout. We thank all the attendees and of course our sponsors. So Sue, let me turn it back to you for closing comments.
Yeah, and we did have a couple questions that we'll have, they're in the chat that we'll get back to people. As a reminder, MSO offers CE classes throughout the year. We are giving at least 10 CE credits this year. We welcome suggestions for presenters and topics. Our next presentation will be May 21st on wildfires. That'll be 1 credit. We are now licensed in 41 jurisdictions, including DC. We're trying to get licensed in the rest of the states. We have a YouTube channel and a LinkedIn page. All those provide information in addition to our website with the over 200 articles that are available. Thank you to Cassidy for doing the polls and posting all the links in the chat. We will send you the slides for each presentation afterwards. And October 14th is artificial intelligence, and we will finish the year on November 17th with 3 credits on emerging issues. Check out our website, msonet.com. Again, thank you for all of our sponsors. Thank you, Jan. And thank you to the team who makes everything possible behind the scenes. If there's anything else, if not, we thank you for joining us today and hope we'll see you for a future webinar.